Welcome back to Fast Money. Affirm shares soaring today, climbing back into positive territory for the week. The fintech stock now up more than 20% since a blowout earnings report last month. The company has plans to expand further over the next year. Our Kate Rooney is live with CEO Max Levchin from the Goldman Sachs Communacopia Conference in San Francisco. Kate.
Hi, Melissa. Thanks so much. And Max, thanks for being here. Great to see you in person.
Great to be here.
I want to get your take on the consumer. We had some big news yesterday from Ally Financial. The CFO talked about some consumer weakness, said that inflation in particular and the job market is really weighing on consumers. What are you seeing from Affirm's borrowers right now?
I have to say, we're not seeing that. I think, sort of not a direct quote, but close to what I read in the transcript was that they noticed a deterioration of consumer credit quality, credit performance over the last few months. We have seen an improvement over the last few months. So our consumer, and we span a fairly large part of the U.S. at this point, is not struggling to pay our bills. There are lots of structural reasons why we're very different. We're unsecured loans, much shorter term, always centered around point of sale. So it's a fairly different type of product, but apples to apples, we're not seeing it.
That's fascinating. Is that true across all income levels for you?
Yes. Of our users, yes.
Really? Wow. I mean, that's so different from what others in the card space have said. I guess other than Visa, MasterCard, who've also said the consumer's strong, that might surprise a lot of people.
So I think structurally, it's always really good to remember we are fundamentally advantaged. Very short term, relatively speaking. Every transaction is underwritten separately. Every transaction is priced for the risk it represents in the moment of underwriting. We are compensated for the risk we take. And as a lender, we do take risk, but we're very good at managing it, and we don't allow it to run away from us ever. And so our results are not an accident.
So I want to ask you about the Apple partnership. I know there's things you probably can't talk about, but in terms of expanding, the lending base with Apple, I wonder, as you look at credit quality and sign up some of these big partnerships, how are you keeping that in check? Or is it really Apple sort of maybe in some cases being the bad guy and saying, no, you're actually not eligible to pay in 4 here for an iPhone?
On the Apple thing, super excited to bring it to life when that happens. Too early to comment on that beyond it, but you actually hit on a really key point. A really important reason why folks partner with us, from the littlest to the largest. We are, and really genuinely are, the right party to ask, hey, should I buy this thing? Not just should I borrow this money, but should I buy this thing, service, whatever? Because we are very honest when we tell you yes, and here's the rate, or no, we think you're overextended. We won't charge you late fees. We won't screw you. We won't kick you when you're down if you can't make a payment. We're on your side. So when we tell you no, it's a genuine, compassionate, you probably are overextending yourself. It is much easier to outsource that to someone like us, who will not charge late fees, will treat the customer right, than trying to do it yourself. And so we are the responsible lender.
Letting them down easy in some cases. I do want to ask you about interest rate. Big Fed meeting next week. What would lower rates mean for Affirm's profitability going forward?
Better growth. Like, our margin target is 3 to 4%. We delivered on that, have been delivering on that for a very long time, intend to deliver on that. That's the cornerstone of our profitability promises. But whenever, over time, not immediately, the Fed rate cuts trickle into our cost of capital, it will allow us to approve that marginal consumer where we would have otherwise said, you know what, we can't afford the risk.
The profitability picture has looked a lot better for Affirm as well, as you reported in earnings. I do want to ask about politics. You are a founder of PayPal. Some of your colleagues recently, or from the PayPal era at least, have sort of switched sides when it comes to their presidential bid or their party. Does this represent, in your mind, a broader shift to the right in tech in Silicon Valley?
Got it. I'm very far from politics. Couldn't opine on that. Opining on the politics sliced by Silicon Valley, that's well beyond my. I'm very busy trying to lend money to help folks buy bicycles and couches. I think we serve both the red states and the blue states, and intend to do so independent of who wins, and including folks in Silicon Valley.
Any big policies that would impact Affirm's business that you're watching for November?
I was very excited about the attack on late fees. I really do think it's a bad thing, and I'm glad CFPB and other regulators are taking a hard look at it. And it's being challenged, of course, as you might expect. But I think late fees should be, at the very least, capped, and if not eliminated. If I have one wish to politicians listening, kill deferred interest. It is such an evil product. We rage against it, and it's less talked about than it should be, and it's just a bad thing.